Welcome to the Financial Explorer. Today, we were examining a conflict unfolding right now at the very heart of the global financial system. This is the battle for precious metals, and the stakes here are incredibly high. Imagine a war where the weapons aren't tanks and missiles, but physical gold and silver. This is a quiet, methodical campaign with a revolutionary goal: to challenge and ultimately dismantle the Western pricing system for precious metals. We're talking about a fundamental shift in the center of financial power on the planet. How is this war being waged? It all begins with an assault on the most vulnerable point of Western financial architecture: the physical metal reserves in vaults. This is where all the paper promises upon which the system is built are being tested for strength. At the core of the Western pricing model, especially on the New York COMEX exchange, lies a risky strategy: a fractional reserve system. The essence is simple. For every real ounce of gold or silver in storage, there may exist dozens or even hundreds of paper claims. These are futures contracts that theoretically represent that very ounce. The entire structure rests on one critical assumption: almost no one will ever come for the real metal. The system operates on confidence, not on actual backing. And you know what? For a long time, this bet paid off. Historically, less than 2% of all futures contracts ended with a demand for physical delivery. Most traders were content with the paper game, betting on price and closing positions for cash. The system's stability depended on keeping that 2% exactly at 2%. But what happens when a major player decides to test the system's strength? That's exactly what we're witnessing now, and this is no accident. We're seeing major global players, with China at the forefront, entering these markets not simply to trade paper, but to systematically place massive orders and demand physical delivery. They're forcing the casino to prove it actually has the chips. This isn't market noise, friends. This is a calculated long-term stress test designed to determine how much pressure the paper system can withstand before it cracks. And the key battlefield in this conflict is silver. Why silver? Because the silver market is already stretched to its limit. Look at the facts. The world has been in a structural supply deficit for several years now. We're not talking about a temporary problem. No, we're re-observing 5 consecutive years where global demand from industry and investors has completely exceeded all new supply from mining and recycling combined. This deep existing physical deficit makes silver the perfect leverage point for maximum pressure. And evidence of this physical squeeze is everywhere if you know where to look. We're witnessing a historic outflow of physical silver from COMEX vaults in New York. Simultaneously, massive volumes are leaving the London LBMA vaults, the other great pillar of Western pricing. And it's not just in the West. In the East, at the Shanghai Futures Exchange, silver inventories have hit decade lows. This isn't a trickle, it's a flood. And it's all driven by fierce, insatiable demand from around the world. All this intense physical demand creates a rare and powerful market signal: backwardation. Normally, it's almost cheaper to buy something right now at the spot price than to lock in a price months ahead. But in backwardation, the entire market flips. The price to get metal in hand today becomes much higher than the price for future delivery. This is a massive red flag. It signals severe acute physical shortage. It means buyers are so desperate for metal right now that they're willing to pay enormous premiums just to avoid waiting. Sustained backwardation is essentially the paper market crying out for help. It's the system raising a white flag, admitting it cannot find enough physical metal to meet immediate demand. This physical assault on the silver market isn't just about playing with prices. It's a critical tactic in a much larger geopolitical shift. To understand why this metals war is being fought, we need to step back from trading screens and look at the global chessboard. At its core, this entire campaign, from demanding physical silver to secretly accumulating gold, is part of a deliberate and historic rebellion against the 60-year reign of the US dollar as the world's primary reserve currency. For decades, the dollar has been the foundation of global finance. But a new world order is being built piece by piece, an order where the dollar is no longer the undisputed king. The most obvious evidence of this rebellion is the incredible gold-buying spree by central banks worldwide. The numbers are simply staggering. In 2022, then again in 2023, and again in 2024, central banks around the globe purchased over 1,000 tons of gold each year. These aren't just new records. These are records shattering all previous ones, year after year. This isn't simply diversification. This is a strategic retreat from paper currencies into the eternal safety of hard assets. But here's the thing. Official figures show only part of the story. The truly stunning part is that a huge share of these purchases, perhaps up to 2/3, is happening completely in the shadows. Central banks are buying gold without official reporting, quietly through other state funds, without press releases, without official reports. This secret accumulation has a very clear purpose: capture as much physical gold as possible without triggering alarms and driving the price up against themselves. And China is the absolute master of this strategy. Officially, they report holding approximately 2,280 tons of gold. But virtually every independent analyst tracking physical metal flows believes their true reserve is a closely guarded state secret, possibly more than 5,000 tons. This secrecy is a weapon. It allows them to keep prices down while buying and conceals the true scale of their strategic departure from the dollar. You might ask, why the feverish rush in recent years? What lit the fuse on this global powder keg? Many point to one seismic event, the freezing of Russia, US foreign currency reserves by Western nations in 2022. This was a true watershed moment, a point of no return in financial history. The rules of the game changed overnight. The scale was simply breathtaking. $300 billion of a sovereign nation's money held in Western banks essentially vanished with a stroke of a pen. This act sent a shockwave of pure fear through every central bank in the world, especially those outside the Western inner circle. The message couldn't have been clearer. Your dollar assets aren't truly yours. They're a privilege that can be revoked at any moment. The lesson was brutal and unforgettable. Dollar-based assets carry a hidden risk that can be fatal, they can be sanctioned, they can be frozen, they can be weaponized in an instant. But physical gold and silver held within your own country's borders cannot. This is the ultimate form of neutral, politically independent, sanction-proof wealth. The global scramble for physical metal is the world ISS financial elite, taking out the ultimate insurance policy against a system they no longer trust. And this brings us to the end game. Because the goal isn't just to create problems for the Western system, the ultimate objective is to build a new one. The goal is to create an entirely new center of gravity for precious metals pricing, a tectonic shift of power from west to east. For decades, the price of gold and silver has been discovered on the paper exchanges of COMEX and LBMA. The metals war is a direct attempt to sever that link forever. The Eastern model wants to restore pricing based on real physical supply and demand, a world where massive physical buyers like China and India call the shots. Essentially, this is a fight to the death between paper price and physical price. And this isn't some future fantasy. We have real-time proof that this great split is already happening. It's called the Shanghai Premium. For several years now, the price per ounce of gold or silver on Shanghai exchanges has consistently been higher than the price in London and New York. This isn't a glitch. It's a clear signal of intense physical demand in the East. It's a market willing to pay more for actual metal. It's a flashing sign that the center of pricing power is already shifting. What's fueling this mass exodus from the Western system? A huge factor is the crumbling confidence in the paper promises of the West, especially in the US dollar itself. When countries around the world look at a number like this, national debt approaching $38 trillion, they must ask themselves, is it truly wise to store our national wealth in this currency for the long term? It's a powerful reason to seek refuge in real assets that cannot simply be printed. You see, the dominoes are falling in a very clear logical sequence. First, confidence in paper erodes due to all the debt and geopolitical risks. In response, central banks make a massive strategic pivot toward tangible assets like gold and silver. This massive coordinated demand from the East then creates a powerful price war for metals. And with every physical ounce leaving Western vaults, that mountain of paper claims left behind becomes even more fragile, like a house of cards in the wind. When you distill it all down, the metals war is a calculated move toward returning to a world where value is based on something real. It's a movement from the abstract to the tangible. It is a shift toward a world where the price of true money, gold, and silver is once again determined by a simple, ancient, undeniable law. Who actually holds the physical metal, not layers of paper promises, which leaves all of us with a fundamental question to ponder as this unfolds. When all the paper promises and digital numbers are finally put to the ultimate test, what truly holds value? Thank you for watching. If you enjoyed this deep dive into the war for precious metals, we'd love your subscription to the Financial Explorer channel for more fascinating videos about finance. Have a great day and keep exploring the financial world.